please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Decent recovery for the market, you'll have to say. Of course, you'll have to magnify it to say it because it's been that kind of a day. But perhaps more visible on the banking side. If you see the Bank Nifty's intraday chart, also a couple of stocks where we're seeing quite a bit of intraday rally. We spoke about Asian Paints earlier. Just take a look at Canpin Homes' intraday chart. Of course, that's the one where there's a bit of a deal brewing, and that one right now is trying to make a move back towards the high point, and it's carried Canara Bank as well along with it. So Canara Bank as well is off the low point. Just could be a case of perhaps shorts booking profit more than anything else, at least at index level, but slightly off the low point. Ashwani and Mitesh with us for BTST calls. Ashwani, you go first. This minor bit of bounce, is this again giving fresh shorting opportunity on the index, or is there a call, or is it a different call and stock calls?
See, shorting opportunity may not be for the last half an hour. In fact, the market has bounced back 120, 130 from the lows on the Bank Nifty, and even on the Nifty, I think there's been a 30 point, 35 point type of a bounce back. So that way, I think there is clear short covering, and maybe you could close a bit higher from here. But this makes things very interesting because we have broken below 200, but not substantially below it. And if we, in the next half an hour, start to close above it, then that creates a problem for people who are short. So while, we can take it half an hour as it comes. So for the day, I think shorts should be covered, and, maybe you can play the half an hour rally. But really, we need to get past 10,200 for any sort of longer term kind of swing trades to open up on the long side. But it's clear that beyond a point, at least today, the market is not able to show traction on the downside. Having said that, intraday, Shrey Infra is a sell with a stop of 81, a target of 70. Bata is a sell with a stop of 686, target of 660. And V-Guard is a sell with a stop of 231, target of 217.
Okay, that's sell for the last half hour on individual stocks for Ashwani. Mitesh, your thoughts on the point that Ashwani is also making, that you don't know, maybe this last half hour traps people both ways. So your calls and of course stock ideas as well.
See, I think on the index is very clear, let's capture the 200 average again and then turn positive. I think there's no point turning positive for every 20 points. So in that sense, I think, I'll still stay put with more of a short bias, or just trail my stop losses close to the 200 average, like, 5-7 points above it on the index. But stock specific basis, yes, I think, you might want to explore long and short both. And I have one sell and one buy, in fact. I have a sell or STBT on Infosys with a stop at 1161 and look for 1140, which is the key short term average to be tested. And NBCC is a buy. It's really been sideways in this decline for the last few days. So that's a buy with a stop below 195.5 and look for targets close to about 206, 207 to begin with. And beyond that, I think I'll be more positive there.
Okay, it's a bit of a recovery, as we've been pointing out, from the low point, about 40 points on the Nifty and about 100, 120 points on the Bank Nifty. So Reliance, of course, started that move. That minor intraday recovery move that you saw, that was, of course, led by Reliance, but there are a couple of other stocks where you've seen some move. Of course, Lever, we have pointed out, has been a strong stock. Larsen and Toubro Maruti has been a strong stock today. So a couple of these stocks at least trying to sort of defend 10,100 on a closing basis.
Yeah, let's see if that level can actually be held on. We still have, just about 25 minutes to go. But right now, it's time for our Monday special Mid-Cap Mania. Let's see what stock is on Nigel's tracking radar today. Nigel.
Well, this time around, I'm going with an IT company to cover. So the company that we're talking about is Saxoft. I remember just around a year ago, there was plenty of interest in the company. But from the high point, in fact, the stock has corrected roughly around 15%. It trades at around 11 times its FY18 EPS earnings. So we're talking about the near term. If they can show some growth, then it'll be trading at roughly around 10 times out. what does the company do? Well, it's a niche as well as a specialist technology play. They're also into digital testing. They're also into cloud management. That's quite important, and that's enablement and management, and mobility and Internet of Things. Basically, they're giving to you what exactly an IT company does with a whole host of services. Now, remember, the company has been on a bit of an acquisition spree. In 2006 itself, they bought a company that's known as Acuma Solutions. Well, that was into business intelligence as well as into data warehousing. Then in 2015, they went for 360 Logica Solutions. Now, that company, in fact, gave them entry into the digital testing space, and gradually they buy it. So they bought it on 51%, then they hiked it by 25%, and now that's a 100% subsidiary. Then they bought Dream Orbit. Now that gave them a footprint into the logistics as well as the transportation domain. And just recently, maybe a few months ago, they bought a company that's known as 5G Solutions. That one gives them an entry into the healthcare space. So what do they really focus on? They call it identifying the pearls and then stringing it together. So that's one of the key strategies. I went through the annual report and this is what it's mentioned. The second part is inch wide but mile deep. So they're getting to the bottom of it. For example, in UK, Europe, they're focusing on the telecom space, and there they're dealing with the B2B segment, but they're giving the ultimate solution. So that's something that they go by. If you take a look at the financials, well, the last few years, it hasn't been very, very great. Yes, they've gone from around 150 to around 270 crores, but the margins, they've been holding at around 13 to around 15%. This year, though, has been a tad bit better. But if you take a look at last year, well, FY17 to FY18, there was a bit of a degrowth in terms of the net profit. But looking ahead then, just the last quarter, that's quarter 3, looked quite good because they delivered a revenue number in excess of around 75 crores. The margin performance of that, that's around 15%, not 5%, so 15%. And the net profit as well was nearly around 7 crores. So quarter 3 was quite strong. And if you take a look at the 9 months and you compare it with the, FY17, then things look good because they've done sales of around 208 crores. So for the full year, they should do roughly around 270 to 280 crores, extrapolating what they've done in quarter 3. And in terms of net profit, they've almost done the entire net profit in the 9 months in what they did or in the entire last year. In terms of other financials, well, they have a small debt of around 40 to 50 crores because they keep acquiring these companies and then growing them. Dividend payout of around 15 to around 20%. So that's fairly good as well. In terms of the geographic breakup, only 10% comes in from Asia and Pacific. The remainder comes in from the United States as well as the United Kingdom and Europe as well. So an interesting small cap company. But in terms of promoter holding, well, it appeared that the promoter stake had fallen, which I don't like too much. But I had a word with the management. What they said was that the employees' trust earlier was categorized in the promoter holding. Now, in fact, this 5% is not categorized. So that's the reasoning that they've given. Interesting small cap company. Let's see whether or not they can show some growth going ahead. And also, let's see whether or not maybe they can do, 28 to 30 crores in the coming years. Then, in fact, it could look rather interesting. But as always, not a recommendation.
Okay, Nigel, thanks a lot. As always, not a recommendation. That's what Nigel says. Neeraj Diwan of Quantum is with us now. Neeraj, good afternoon. Are you buying right now, or you think it is, this correction has legs?
Yeah, good afternoon, Anuj. Yeah, definitely the kind of selling we are seeing, I'm looking this as an opportunity to buy, but though I'm still holding and trying to buy only very slowly. And the similar recommendation I'm giving to my clients also, that one should be looking at buying, but one has to really stagger and really buy small quantities, because you seeing a good selling happening even at 200-day moving average, and you're not getting that buying coming back at all. So I would say there's a long-term opportunity, but one has to buy slowly.
By the way, the bears are not going to let up that easy because the market is back at the lows of the day. In fact, we have been trending below the 10,100 mark again. You can see the sharp reversal. Anuj, I think this is the point we were just debating with Ashwani, right? Whether the bears will go with a fresh hammer now because that small recovery was visible. And I can see the selling come back in names like HCL Tech, ITC, a lot of these heavyweights. So what do you make of this?
Yeah, I think this last bit really is brutal because it's telling you that even 20-25 point bounces would be sold into, and that too in stronger stocks. So now there's a good chance that you're breaking the 200-day moving average on a convincing basis and on a conclusive basis, and there's a good chance that minor recovery that you saw into the bank nifty as well and into the nifty as well, that may get sold into as well. I think we are already at the low point of the nifty. not quite on the bank nifty. So yeah, this last bit of downtick obviously clearly is a bit weak now.
Absolutely. It's in fact making fresh lows. I don't know if we have immediately Ashwani with us for a view. We'll go to him for strategies in just a moment. But let's figure out how dealing rooms have dealt with the Monday blues, or Nimesh, should we say the Monday reds? It's just one way down and fresh lows as we speak.
Oh yes, sir. In fact, the intraday pullback was again got sold into, and constantly I've been getting this feedback that now there are signs of capitulation in the mid cap and small cap. Huge activity in the HNI desk, and that's where the wholesaling pressure seems to be. Given that now the Nifty is below the 200 DMA, there is a fear and a scare of further sell-off in the mid cap and small cap, and that's the reason why you're not seeing any buying coming in at any level, any given point in time in today's trading session. But the flows are mixed at the institutional desk, but clearly there is no buying support coming in. There was a brief buying by some of the domestic funds in the large cap names, even that got sold into. Essentially in the large caps, it's the metal names, the PSU bank stocks, where there is massive selling pressure coming in. So those are the sectors which are still poised for a further sell-off. That's a feedback which I'm picking up from the dealing desk. Clearly, now the dealing rooms have started talking about 9800 on the Nifty, or maybe 97 on the Nifty. So the direction is clearly on the downside now. Any pullback is going to get sold into, and there is no massive support coming in from the global markets as well. So we will mirror as to what's happened in the global market, but domestically, given the political uncertainty, given that the flows have tapered off from the domestic funds as well, that's going to keep the pressure on the PSU bank stocks and overall on the bank Nifty as well. Net, a big scare in the mid cap and small cap from the HNI category now, and even in the large cap and small cap, lack of buying support from the DIs is the reason why you're seeing Nifty, bank Nifty, and all the mid caps under pressure today. Okay,
Nimesh, thanks a lot for that. Ashwani, if you're still with us, just wanted your thoughts on what would have happened in the last 30 minutes of trade. There was a 40-point sort of bounce on the Nifty, but that's been sold into, and now we are at fresh intraday low, at least on the Nifty.
Well, what happened was what happens in every hour, on last few days, in the last hour. Basically, there is nobody on the other side. And at some point, it becomes, self-fulfilling prophecy, where, selling begets selling, and the buyers just move to one side. So now the issue is that there are very few people who are willing to step up to the plate and buy. And with, March issues, that's not helping matters anyway. But silver lining is that there are only 200 advancers and now about 1430 decliners. So it's kind of a washout type market. So the idea should be not to get overexcited on the short side into the close, because tomorrow itself, if global cues are better, you will at least open with a gap up. So you are sitting on almost 1.5 days worth of selling. So if I would be short, I would take money off and then take a fresh call tomorrow morning, because this kind of washout cannot sustain for too long.
Almost a 50-point dip, 45 to 50-point dip in a matter of 10 minutes flat. It's still 100 down as far as the Nifty goes. Sensex down 273. Mid-cap index also down about 1.5%. Ashwani, this is what I wanted to ask you before we went into the break. There's a lot of selling in IT as well, not just today, but actually the last 2 or 3 sessions. So for those people who went and bought these stocks with slightly deeper stops, what is the advice, for instance, on a Tech Mahindra or HCL Tech or even Infosys TCS? Is something turning?
See, IT has not even broken the IT index. Even the 200-day moving average is broken 50-day moving average just today. So my sense is whenever this thing turns, I think IT will be the outperformer. It's fairly clear that money is moving towards IT. Now, it's down to people who want to just exit India. They want to sell whatever they have. Now probably they have only IT left. So now they are selling IT so that, they clean up their portfolio before 31st of March. A lot of this selling is, maybe LTCG related, etc. Because you cannot go on underperforming while global markets go in one direction, we go in the other. So we have to really reassess on 1st of April, how much of this selling was because of LTCG and how much was it because of inflation and all these other political issues, etc.
Okay, by the way, just see the intraday chart of IDBI Bank now. Really remarkable the way that stock was holding on, and now it's in fact down once again about 8.5%. So making the lows of the day for now. Not looking good on that. Ashwani, chart check on this one.
See, IDBI, does not have too much of a chart to talk about, because either it goes up 25% or comes down 25%.
Yeah.
It's fairly volatile, 60 is the downside, maybe 85, 90 upside. It's tough to say where it's finally wanting to head.
Okay, on that note, let's move to some market opinion. Earlier in the day, we caught up with Ajay Srivastava, CEO of Dimensions Corporate Finance, to get his sense on the current correction in the market and whether there's more downside. Take a look.
I think quite a bit is going wrong, but also some things are going right also, in the sense that what has happened really is that the investors were too heavily weighted on one side of the portfolio, which was the volatile mid-cap, which was the banking sector, and which took a big knocking. If you look at the sectorally, the FMCG, the pharma, and the IT were much lower weightage in most portfolios. They haven't taken a bloodbath, because simple is the fact is that they don't have enough firepower to sell out there. In this segment of the market, there is people are over-invested. So even if you look at bargain hunting, etc., that's not happening. So what's really happening is set of negative clues, and there is no firepower left in the market to buy into at the bargain levels. That's what is happening today. Very difficult to make big investment decisions for people who are already over-invested in the market. And I think that's what is hurting the market, is pure liquidity not entering, whether it's HNI, whether it is PMS money, that's not entering the market at this point of time. So the buyers, the sellers are not able to find buyers of quality, and that's where you see the price fall, which is so rapid and fast. And I think this will play out for a while, because till the people don't rebalance their portfolios, till the new money doesn't come into the market, you will see the volatility towards the lower side keep on accentuating.
Are you buying right now, Ajay, or would you wait a bit?
Well, we are certainly buying. We are certainly buying large banks, private banks. We are certainly buying, and decent quantities. It's not small amount. We are buying decent quantities of large banks, because we believe that, if, let's take this a step year forward, with all the uncertainty and everything together, it's only going to help the large private banks. It's not going to take away from their value. So I think what we are seeing, a crisis in the PSU bank, is a godsend gift to the private banks today at this point of time. You can't not buy into those. So private banks, we're definitely buying. We're definitely buying a lot of FMCG stocks at this point of time. And we believe that they could be given a further uprise. Pharma, we bought a little bit, but not too much. We're still waiting it out to see where we are. And on the, the old cap, we bought some defense stocks, because we believe that in the next 6 months, the government is going to spend more than 80% or 90% of the budget heading into the elections. So companies dependent on government are going to get a windfall money in the next 6 to 9 months, and maybe taper off in the last quarter in terms of expenditure. So we are buying some of the mid caps in the defense sector. We bought a lot of stuff there. We're buying, so I think that covers basically what we have incrementally added to the portfolios.
So Ajay, in the FMCG, of course, there are a lot of stocks, right? There's the classical lever. Then there are the ones where we have seen recently earnings growth, like Jubilant Foodwork. Of course, there are United Spirits, where there's been so much volatility. So which part of, what part of FMCG would you be buying?
See, okay, I'm not recommending any stock, but just to name it, Hindustan Liver is in our stock. We're buying back Bata again. We had sold off. We're buying back Bata again. We got a lot of holdings in Britannia at this point of time. Beautifully positioned stock in our view. We have got holdings in Jubilant Foodwork. Yes, we got significant Jubilant Foodwork at this point in time. And now we are looking at whether ITC makes some sense. ITC to me is like almost like a quasi-Reliance at this point of time. One big product with huge cash flows, like petrochemical, and number of children eating up the dinner at the table without contributing anything. We are hoping that some of the children on the table will start contributing to the family kitty at this point of time. So ITC, perhaps, timing-wise, we can wait a while, but it's at the cusp where you can see a major transformation of the stock in terms of FMCG. And ITC has been a problem for the mutual fund buyers also, Anuj, because if you look at the mutual fund FMCG, huge loading of a non-performing ITC in the last 2 years has led to very poor performance of FMCG funds. And I think till they don't correct it, a lot of money will not flow to the stocks. So in my belief, If the mutual funds cut down the ITC weightage in the funds, you will see substantial investment of people in FMCG. People are underinvested, and therefore I think food market is one big market we're looking at. Detergent market like HUL is definitely going to make a serious headway in the market. SME sector is dead, so these guys get an advantage. So buy into foods, buy into detergents and soaps and the segment, and I think you are doing just fine. And of course, footwear, you can't beat Bata's franchise. So I think it's one of the franchises which is just phenomenal, absolutely. It's given you a price correction, go for it. Now, a lot of my technical guys in my company advise me that this, the market is not giving you good buy signals. But well, that's the difference between fundamental and technical. We perhaps will have to wait longer than the guy who works with technicals, who buys and sees an upside immediately.
All right, so some of the stocks that Ajay is liking at the moment. Well, let's also welcome Mayuresh Joshi of Angel Broking in the conversation. Mayuresh, good to have you on the show. And I want to talk to you specifically about one stock, and that is Sona Koyo. It's fallen quite a bit today, 6-7% down. Promoters are selling some stake in the market through an offer for sale. Your thoughts? How do you view it on the fundamentals?
So it's been a good story, Surabhi, but largely again I think the entire auto ancillary universe has to be played according to the niche products and the expected earnings CAGR that they will generate at this point of time. So a large element in what we are probably liking out of the auto Inc. universe on declines can be a stock called Endurance Technologies. Now the kind of investments that this company has done and the expectations of top line growth is quite humongous over the next few years as we see it. The second element in terms of the automatic leverage being played on their balance sheet will also reflect very, very positively in terms of the company actually being debt free over the next year and a half, and the improvement in return ratios, specifically the ROE component. The third element in terms of the entire EV saga and story that gets played out, I think it's also a big beneficiary on that aspect. So I think Endurance, Surabhi, is something that will probably continue to pursue in a staggered way on declines from the auto ancillary pack.
Okay, Endurance perhaps is a bit. Decline in Jet Airways, Just Dial, Gen Irrigation, Jindal Steel, JP Associates, a lot of these names right now seeing quite a bit of decline and are ending at or close to the low point. Mayuresh, good afternoon. So thoughts on a couple of these, let's say Jet Airways, how would you approach that one?
So afternoon, Anuj, again, the sensitivity in terms of aviation stocks obviously depends in terms of how the crude price movement is going to be and expected to be. And again, I think the rupee-dollar equation, because the reported earnings come in dollar terms. So if one really assumes crude to move in a range between $60 to $68 a barrel over the next few months and the rupee not depreciating substantially against the dollar, I think the kind of input costs, specifically as far as the ETF prices are concerned, are anywhere to the tune of 26 to 29%. Couple that up with a lot of the other operating expenses that get played out, I think the CASK, which is the cost per available seat kilometer ex fuel, is a very important parameter to track. The second element obviously becomes the available seat kilometers, which has been growing, and again the passenger load factors, which have been pretty reasonable so far. So realizations might have taken a knock in terms of competitive pressures, but the CASK ex fuel and the optimization thereof is clearly getting reflected in terms of operating cash flows improving. So I think we remain selective on this sector. SpiceJet is something that we continue to like, both in terms of the operation efficiencies that it has probably achieved, and again the expectations that are probably getting laid out in terms of the revenue-driven growth, which will reflect very, very positively in terms of the RASK and the CASK as fuel is probably expected to remain in contained territory. So I think SpiceJet from the aviation space is something we'll continue to prefer on declines.
Okay. Neeraj, finally, one of the hardest hit spaces today obviously has been metals. Whether from the Nifty 50 or beyond, any stock that you would like to pick up in this decline?
I think of the metal space, there are numbers which are improving there also. I think the ones which are purely domestic focus, whether it's JSW Steel or whether it's Steel Authority, which had a very good quarter. Last quarter was a profit after so many quarters. And among the smaller ones, Jindal Stainless. These are the ones which we are positive on, and I think these are opportunities that we're seeing because the global trade war, noises that we are hearing, that these stocks are correcting a lot. So Tata Steel would also be very attractive after the fall, but I would still wait and see how the trade was, fair, and then we can take a call on Tata Steel. But barring Tata Steel, the other big ones like JSW Steel, SAIL, and the smaller ones, Jindal Stainless, are among our top picks.
Okay, just about 1.5 minutes left. Ashwani, I remember, I think it was a month back that you were talking about this head and shoulder pattern on the Nifty, and you said that there's a distinct possibility of that happening. This right shoulder, that's now getting completed, right? Or do you think it's got some more room to go?
See, right shoulder has completed, and I would say it has also broken the neckline. The neckline was the 200-day moving average. So just technically, the pattern target is fairly, dangerous and scary, 9,000, 9,200. Now, obviously, why that will happen, maybe BJP will lose all the state elections, etc. But that is the pattern we can see. And the way this right shoulder has come, with great amount of momentum and force, chances are this is a fairly genuine pattern and one where you shouldn't be surprised with the target.
9,000, 9,200. Wow. Okay, that's going to take, I think, a couple of seconds to digest. So we'll do one thing. We'll let the market close for the day, Ashwani, and then ponder over what you just said. But I mean, I don't know how to paint any sort of a positive picture for today, Anuj. What's your reading?
Yeah, been a bad day for the bulls. I think the market has given clear indication that this is now a sell on value market. Look, you can make money both ways. There's futures and options, and you should use futures and options for the purpose that it is, to hedge your portfolio, right? If you're a retail investor, and you could do that. There are still a lot of mutual funds who are making positive NAVs. So anything is possible. This year is going to be tough one. This year is going to test a lot of fund managers as well. So there's absolutely no harm if the market is giving you a message that it wants to go down and complete a correction. In that case, using futures and options to perhaps hedge your portfolio, to take fresh shots, absolutely nothing wrong in that. But for now, of course, the markets have ended and closer to the low point of the day. Let's put it that way. And this is disappointing for the bulls because you had a ranked bad Friday as well, and on top of that you've seen this kind of decline. It didn't look like that when we started. Of course, we started in the green, but from that point there has been a big decline. Of course, in terms of individual stocks, the top 8 or 10 losers don't count for much in the index. So stocks like HCL Tech, Tata Steel, Bharti Airtel, Tech Mahindra, BPCL, IOC, even Bajaj Finance, Hindalco, HPCL, Wipro, all of these stocks down between 3 to 5%. But as I said, they don't count for much in the index. The problem for the index was Infosys, that was down about 2%. State Bank, that was down about 1.7%. ICICI, that was down about 1%. And perhaps the Tata Motors once again down 1%. HDFC as well down about 0.8%. The HDFC Bank managed to sort of outperform in a falling market. But mid-caps was where there was quite a bit of selling pressure.
Oh yeah, absolutely. The index has lost about 300 points, more than 300 points at close. And the worst of stocks, obviously PSU banks take the top honors once again. Lots of selling on IDBI Bank today, 7% down over there. Of course, you've got other names like Central Bank of India, OBC, or Syndicate. Most of them have been trending on the lower side almost throughout the session today. So cuts between 4% to 6-7% depending on which of these banks you are actually picking up. There's been some selling on metal stocks, of course, beyond the Nifty 50 names as well. So whether it's the Steel Authority of India down 5.5%, some of the other sort of material stocks like an NMDC 6.5% gone there. Let's just pull up JSW Steel. Yeah, so even that one, relatively people talk of it as a domestic facing play, so better strength, but still 2% down on even a JSW Steel. Then there is real estate, so stocks like DLF, HDIL, Peninsula Land, largely speaking some pressure on a couple of these realty names, DLF being the hardest hit with that 5.5% decline. And then some more names like REC, for instance. TV today, of course, losing ground despite news. It seemed positive they're getting money because they're selling those radio channels. Sona Koyo, where the promoters are selling some stake in the market at a price that was at a discount to the Friday close. So the stock was not spared today, 6% on the lower side today as we're seeing things. So that's how it's pretty much ended. I don't have too many stocks to name on the upside. Of course, the graphite rally is still on. I mean, that's a space where there's plenty of momentum. HEG, by the way, fresh 52-week high on that stock. Graphite India also 2% on the higher side. Syntex Industries has been doing something interesting last two sessions. Suddenly, volumes have picked up on such a bad day. Even today, the stock was up 1.5% on the higher side. Some outliers like maybe an IOB, which didn't participate in the overall otherwise sluggishness in the PSU Bank universe. But these are very, very few and far in between names. Otherwise, tough day for the mid-caps, Anuj.
Oh, tough day for the mid-caps, clearly. Let's take final thoughts then. Mitesh, for tomorrow, what's the call? still look to sell the rallies, or do you think the market is due for a short covering bounce?
We are definitely oversold, Anuj, but I think, as long as we don't capture the 200 average, I will not be convinced of any rally. So I think the idea should be that if you get a 30, 40, 50 point kind of a bounce back, yes, sell. I think cover your position only once you start getting past 10,160, 165. If that doesn't happen, then I think, the slide can continue and extend, possibly 99.50 on the downside could be tested. But yes, we are oversold, so we will get a bounce back, but the bounce back has to be strong. Like, we had one bounce back today as well, but it didn't last long. So I think capturing the 200 average, which could be a pivot, would be an important event. So unless until that happens, I would not really worried about the short side of the market.
So we've been telling you, despite all the nervousness in the secondary market, there's still plenty of action on primary street. And there's one more IPO in the offing. Priya Sheth caught up with Patanjali Keswani, CMD of Lemon Tree Hotels. The company is launching their IPO. She began by asking him about the share issue, of course, what the money is going to be used for, and what shareholders can expect through the journey.
The size is about 1,038 crores. The share, the price band is 54 to 56 rupees. So we are selling about 18.5 crore shares, which is about 23% of the company's stock. The selling shareholders are basically Warburg Pincus, which has been a private equity investor with us from 2006, and a few early investors who invested in the company about the same time.
In terms of promoter dilution, will there be a sort of amount that you would be diluting as a part of the overall issue?
No, there is no promoter dilution. There is only, it's an offer for sale, so there's no primary raise either. It is basically these shareholders who are selling their investment with us.
Run us through the kind of expansion plans that you have for Lemon Tree. We do understand that you have been looking at aggressively expanding across all the categories of hotels.
Well, we right now, you would have seen in our RHP, we have about 4,700 rooms, and we are adding another 3,000 rooms in the by March 2021, of which 1,600 are owned and 1,400 are managed. So we will grow about 70% in the next 3.5 years, 3 years, assuming we don't add anything more.
In terms of revenue, you all have been having about a CAGR of about 17+% over the last couple of years.
Yeah.
Do you think that this kind of revenue growth is sustainable?
I expect that based on this report, demand is hardening and supply is slowing down. So we expect the dynamics of this industry cycle to reverse. And finally, after many, many years, we should see demand overtake supply.
That's Lemon Tree. And here's another one. Defense firm Hindustan Aeronautics has hit the IPO market as well. Yash Jain caught up with V.M. Chamola, the officiating CMD at the company, and began by asking him about the total size of this issue and how much they are aiming to raise.
Insofar as IPO is concerned, it is 10% of the equity shares. We do expect around 4,000 crores will be mopped up. And insofar as HL is concerned, it is basically the amount, since it's a government company, what are the proceeds, whatever the amount we get it from that, will go to the government only.
Okay. Sir, as far as your production map is concerned, how many production divisions do you have currently? How many research divisions do you have at the moment? And also, what's the greenfield and the brownfield expansion which you have planned on both these fronts in the next 3 to 5 years?
We have 20 production units and 11 R&D centers. Most of them are co-located.
Right.
Insofar as expansion is concerned, greenfield and brownfield is it. We are, first is Tumkuru, you must have heard, near Bangalore. It is coming up basically for LUH, light duty helicopter, which is going to replace the light helicopters like Cheetah and Chetak.
Right.
And insofar as expansion of capacity, brownfield as you said, LCA is a real, it's in a project which is going to give fresh lease of life to HL, or going to strengthen HL's what you call business. And we have today, we are in a position to produce around 8 aircrafts, which is going to be made into 16. So that capacity is going to get augmented.
Okay.
All right, let's move on now. The heart of perhaps all this is politics. Politics really taking center stage as Telangana CMK K. Chandrasekhar Rao arrives in Kolkata to meet West Bengal counterpart Mamta Banerjee. Sources indicate that a blueprint for forming up a third front for the upcoming general elections in 2019 is the primary agenda. Nitya Balakrishnan is joining in with the latest. Nitya, politics is really heating up and we can feel the heat right here on Dalal Street as well. Tell us the latest.
Absolutely, Surbhi. In fact, just a few moments ago, we did see KCR land in Kolkata and currently meeting with the Chief Minister of West Bengal, Mamata Banerjee. And top of that agenda, timing is very important, Surbhi. We're given to understand they will be taking a decision whether or not to support TDP's no confidence motion against the government. Remember, earlier in the Lok Sabha, before it was actually adjourned for the day, there was questions of whether this will be taken up. But as and when it is taken up in the parliament, will these two parties support it? That is a crucial decision they're looking to take. Second, of course, is whether they will be looking to extend an invitation to TDP for the third front. That is an important issue that they will be discussing, is what we're picking up from sources. More importantly, of course, formation of that alliance, which is a non-Congress, non-BJP third front party ahead of the upcoming 2019 elections. And this will be a big game changer. We're given to understand a blueprint, which are the regional parties to invite, is something that KCR and Mamata Banerjee will be drawing up. Remember, what they're looking to do is decentralize power. Apart from defense, national security, banking and finance, they believe that the states should get back the power, and that is the aim really of this third front. Now, what this will mean for politics here in Telangana, we're hearing from sources in the Telangana government that it will be KT Ramarao who will be elevated to the role of the party president in the next 2 months if KCR goes forward to take center stage. So definitely politics heating up in this side of India, and undoubtedly it will have a huge impact in the upcoming general elections as well.
Okay, all right, Nitya, thank you very much for that.
It's a bit of a hesitant, jittery market ahead of the first US FOMC meeting in this year and the first one for Powell as well. And recently, we've seen more aggression come in the sense of tone off from the US Fed, and that perhaps has led to strength in US dollar, and we have seen some profit taking across asset classes, more so for the gold prices, which have continued to decline and is trading at a 1-month low below $13 per ounce as well. Georgette Boyle is Global Head Forex and Commodity Strategy at ABN AMRO Group Economics. Georgette, hi, good to have you. How are you reading? How are you getting into a Tuesday with the US FOMC slated? What are you expecting?
Hi there, good morning. To be honest, if I look at gold prices, they have moved a bit different than you normally would assume. They have, over the recent week, they rallied when equities were doing well and yields were also going up, so in a risk-on environment. And like now, when you have a bit of a risk-off, dollar is doing better and gold is down. The fact that gold is under pressure is mainly to do with a somewhat higher dollar. And like you said, Mr. Powell, his first meeting at the FOMC in deciding on interest rates, towards, or in fact up to the FOMC meeting, probably markets will be quite cautious and expect gold prices to be a bit more under pressure. But also, if I zoom out a little bit and take the coming weeks, I think there could be more pressure on gold prices. I think we could see a test of 1,300 in the coming weeks, mainly because of a kind of dollar recovery.
Georgette, where do you see a support come in then? If there is a breach of 1,300 on the lower side, until where do you see the prices falling?
I think you could test the 200-day moving average at 1290. I think that's a possibility. You may even temporarily go below that, but afterwards there should be a possibility of a rebound again. But I think we should be able to see a test of 1,300 and then also 1290. And that could happen in the coming weeks, months.
Georgette, how do you look at the US dollar overall? Because there are reports on how markets do not expect the dollar index to continue to raise. 92 perhaps seems the tops as per many reports there. What is your own sense? Where are we headed in sense of currency going forward?
If I look at the long term, I think the overall view is negative. If I zoom in and look at the short-term developments, I think there should be a kind of recovery possible. I think especially if you look at the euro dollar has moved too quickly, and you see that there is quite some resistance around this 125 level. So a kind of dollar recovery, euro weakness towards 120 should be possible, and that will also directly have an influence on gold prices lower. So there is some kind of recovery is on the cards this year. If I look at next year, I expect renewed dollar weakness and also higher gold prices. For example, for the end of this year, I have 1250 for gold prices, but end of next year, I have 1400. And if I look at euro dollar, we have end of this year 120 and the end of next year 130. And that's reflecting, one hand, short-term dynamics as well as investor positioning, which is in the euro quite heavy, very large positions. If you look at gold positions, okay, they're not that heavy, but they are still quite long. So I expect a bit of liquidation of those.
Georgette, while of course 3 interest rate hikes from US is something that the markets have factored in, if there is anything more, if we do hear more hawkish statements coming in from the US Fed chief, do you see the markets then really going for a cover?
I think it very much depends on how investor sentiment is going to react on that.
Sure.
3 and the possibility of 4 is in there. The only thing is that if they were to hike more than that, I think that would spook markets and could result in some risk off. But yeah, 3 should not upset markets too much. Also, 4-1. If the economy is doing well, it should be okay. The only thing is what's more worrying, or more people are more concerned is about the political situation in the U.S. And that is more affecting dollar and sentiment currently than the Fed, I would say.
Your point is well taken, Georgette. We'll let you go at that. So that's a view really coming in from ABN AMRO, that the US dollar weakness overall is what they really are anticipating. And gold prices, of course, could touch 1290 on the lower side. But for the next couple of years, that perhaps could be a good level to really start accumulating. Kishore Narne of Motilal Oswal as well joins us with his strategies. Kishore, hi. What is your own sense for the gold prices? What levels do you see? And what are you expecting from the US Fed in sense of a reaction?
I think I'm still betting on the 3 rate hike theory itself, and looking at the kind of sentiment which they are trying to put out, especially from the Trump side, is that though the protective economic policies would be there in the broader perspective, but still the dollar could remain robust in the coming months or so. I think that would really put pressure on the economy itself. So I think at this point of time, not buying into that 4 rate hike cycle, but I think gold silver has discounted that pretty much. If at all there is a dovish kind of a statement or less hawkish also, I think then gold should recover much better. But again, for the day, I think we are still going to sell gold and silver because the market itself is bearish, and there's no point in reversing that strategy at this point of time. So one can sell gold at around 30,260 with stop loss of 30,380 and a target of around 30,040 for the day.
Kishore, how are you looking at the metal prices? Because the industrial metals started their day on a much weaker note. So whether it was the ferrous metals, the non-ferrous space, or the metal stocks in the on the BSE and NSE indexes today, everything really has done quite badly.
Yeah, I think, see, there are 2-3 things which are causing this mayhem in metals. Number one is that Trump's protective policies and his threats that he'll be putting duties on aluminum and other metals. Second is that despite we're going through that winter where aluminum production has been cut down significantly, despite that we have seen inventories building up in China. And the third is stronger dollar. I think all these 3 as a combination has been putting pressure on base metals as a pack. So at this point of time, copper still looks bearish. Probably if you're looking at international markets, I think 67.50 something is a good support. I think it should be breaking that also, and probably we are looking at 66.50 on dollar levels. India also is looking bad at this point of time. Probably 450, 451 could be on the targets. Zinc again, one can sell and go on for the targets around 214 odd levels, but I think there are no metal which is significantly bullish at this point of time fundamentally. There could be pullbacks like zinc, which could be on the long side.
So Kishore, the positive story that we started this year with on the metal space, would you say it seems to be phasing out now, or would you say this is more of a near-term correction? The long-term demand estimates and the deficit story that the metals have been running on perhaps still stays?
I think there is no the mass base metal story is going to fade out soon. It will be pick and choose within the metals. I still believe that nickel is going to be an uptrend in the next 1 year or so, maybe in the next couple of years also. Zinc could further extend its rally for the next 3 months or 4 months. Copper and aluminum should be under pressure. These two metals will be the weaker metals within the pack.
All right, so that really is the view coming in from Kishore. Thank you so much, Kishore, for laying out those strategies and those macro fundamentals as well. But with that, that's all the time that we have on this edition of Closing Bell.